All right, guys, so no matter what market you trade, okay, whether you trade Forex or futures or stocks or even options, I think if you're not paying attention to what's happening in the oil markets, okay, then you are really, and I mean really, missing out on some absolutely awesome trading opportunities, okay? So in this video, I'm going to show you two insane trading sessions on oil. I'm going to show you how we nailed the start of the trend right over here, okay? And more importantly, in this video, I'm going to show you how to handle a nice retracement whenever it presents itself within the direction of a trend just like this to nail a beautiful winner. All right, so let's do it. All right, what's up, traders? It's Mark here at DynoTrading. Hope your trading week has gone very, very well. It was another awesome week to trade. Almost every single day this week was just a gigantic trend day, and today was no exception. So let's get right into it. First things first, I want to answer a question that a lot of you guys out there are asking me, which is, what is the DynoBars filter? Well, all it is a chart style output, okay? It's not an indicator, it's not a chat room, it's not a course. I don't believe in any of that bullshit. If you guys have seen my videos before, you know that about me, okay? And how the DynoBars works is with one click of your mouse, you take this bullshit chart right here and you make it look like this. All right, and I'm not cherry picking. You can see the date here. It's April 23rd. That is today, okay? Here's the before and here's the after. Very same chart. Okay, so that's what I mean when I say the DynoBars is a chart style output. It's going to transform your chart from this crap right here, all right, all this candlestick and indicator bullshit, and it's going to make it look like this, all right, which essentially enables you to forecast and spot really nice starting points of the trend just like this. This was the starting point of a bullish trend. And all the way up here, this was the starting point of a potential bearish trend, right? And here's the thing, man, this is the truth. You'll never be able to spot that information on this candlestick bullshit. I don't care what anybody tells you. Candlesticks and indicators are crap, all right? Anyway, let's get back to business here. So the focus of this video is, how do you analyze what's a good retracement and what's a mediocre retracement? And I have a very simple answer for that, okay? And this is, again, my opinion. This is what I like to do. I have a lot of customers who vary up the retracement percentages, but let me walk you through what I would consider a very perfect setup on today's price action, all right? So when you identify the starting point of a potential trend, that doesn't mean you randomly go long and just buy it up here, right? You want to isolate and identify this zone right here, okay? And you want to do the same thing with the bearish signal, right? There's no difference with the signals. You're just taking the opposite direction, right? So this is basically step number one. When you identify the trend bar, capture the zone, right? Same thing over here. Identify the trend bar, capture the zone. Now, what I like to do is I like to wait for a percentage retracement within the zone. I've come up with the number 30. That works for me. But a lot of my customers and a lot of my traders, right, they will take any retracement percentage as long as it's inside the zone. You get what I'm saying? Because this zone right here is technically a high probability entry into this trade within context of the direction, right? Which in this case is bullish, right? You're basically a buyer in this zone right over here, right? Now, what if you missed this gigantic, huge, like $10,000 move on oil today, right? You're like, holy shit, the thing's just taken off like a rocket ship. When's it going to turn around? Well, here's the thing. You have to wait for a new trend to start before you even think about getting in and trying to short this market, right? A lot of guys got their heads cut off trying to short oil today, right? They tried to short it here. They tried to short it here. They just kept trying to short it all day long, right? And if you're looking at this chart, can you tell me when was the right time to short oil, right? Let's go ahead and timestamp this. I'll put my mouse right on this red bar. It's the only red bar that appeared in the entire regular trading session, which starts at 7 o'clock in the morning and ends at 2 p.m. in the afternoon, right? there was only one short signal. Check out the x-axis. It says 11:01 a.m. right? So shame on you if you tried to short oil anytime before 11:01, right? And once again, guys, here repeats the same pattern. A nice, beautiful retracement. And this kind of meets more of my criteria because, as you can see, this retracement certainly touched the 30 to 40% retracement zone. So I really like this potential signal. Not that I'm saying there's anything wrong with this. I had a lot of traders take this entry right here and they killed it today, but this just didn't meet my personal risk to reward retracement criteria, right? And you've heard me say this before, guys, right? Now, trading is very discretionary, okay? But at the end of the day, you have to identify, are you an aggressive trader or are you a conservative trader? And both traders can make money, right? There's nothing wrong with an aggressive trader who's going to take this entry. And on the flip side, there is nothing wrong with a conservative trader who's going to take this entry, right? If you ask me, I think both styles of traders, whether you're aggressive, whether you're conservative, I think both styles of traders can actually make money because, as you can see from this chart on oil today, it did not let you down. If this is all you did today, which is wait for the signal bar, draw the retracement zones, wait for a retracement 2 times, right? I mean, this was a huge day for you, okay? Now, what about other markets, okay? Well, how about the Dow futures, which you guys know, this is one of my personal favorites, all right? Now, you tell me if you see any of the exact same signals and setups and patterns, whatever you want to call them. Do you see any of the same exact patterns that you did from the crude oil chart? Okay, this time on the Dow chart, right? So let me go ahead and do that for you. Draw the highs, draw the lows, wait for a nice deep retracement. It happened 2 times, once over here and again over here. And you can see this thing did nothing but go straight up like a rocket ship, right? So listen, guys, I'm not the inventor of retracement trading, right? Somebody else has invented the concept of retracement trading, right? But what I can tell you is when you isolate the concept of retracements and you do it on a price action based chart, okay, I think that more often than not, it's going to be very, very successful at helping you to figure out the direction of the overwhelming trade, which, let's be honest, as a day trader, we want to get in on giant, huge moves, right? We're not looking to scalp a few ticks here and there, right? We want to capture the home run, okay? And so using retracements, I think, is a very low risk way to get into the overwhelming trend using nothing but signal bars and retracement lines. Okay, so I think that'll do it for this video, guys. I hope you found something informative and you learned something today about retracements. Okay, if you have any questions on the dyno bars, get in touch. Guys, thanks for watching this video, and as always, see you on the next trade.